Hey everyone, welcome back. Today we're going to take a look at Walmart.
Sounds good.
We've got their financials, earnings calls, dividend info, and some stock analysis stuff. Should give us a pretty good picture of where they stand. You ready to dig in?
Definitely. I'm curious to see how all this data reflects their current strategies, especially with the competition they're facing.
All right, let's start with the basics. We all know Walmart, ticker symbol WMT, but just to remind ourselves how big this company really is. Over 10,500 stores across 19 countries, and they employ, 2.1 million people? That's a massive global reach.
Yeah, that scale is really a double-edged sword. It gives them a ton of leverage with suppliers and helps maintain their everyday low prices, which we know they're famous for.
Right.
But at the same time, managing something that huge, that's a serious operational challenge.
That's true. It's kind of like steering a giant ship. It takes a while to change course, but it can carry a ton of cargo. And from what I'm seeing in these reports, they're steering that ship pretty well.
Okay, so what are we looking at?
Well, just in their latest quarter, Q2 of fiscal year 2025, they pulled in $169.3 billion in revenue.
Wow.
And it wasn't just a good quarter, it was strong performance across all their segments. Even factoring in currency fluctuations, consolidated net sales are up 4.1%.
That's the kind of consistent growth investors love to see. It shows their core business model is really solid.
One number that stood out to me, their global e-commerce sales grew 21% in that same quarter. It's not just brick and mortar anymore, they're really competing in the digital space.
Yeah, they have to be. That's how they stay relevant against companies like Amazon. And from what I can tell, it's a deliberate strategy for them. They're investing a lot in those platforms and in making sure orders get delivered quickly.
Let's dive into those Q2 highlights a bit more. Besides the overall revenue boost, their comparable sales in the U.S., excluding fuel, went up 4.2%.
So more people are shopping at Walmart and they're buying more stuff. That's good news.
Exactly. That increase in transactions and unit volumes is what's really driving it.
And what's interesting is that this growth doesn't seem to be coming from just one type of customer. They're attracting shoppers from all income levels. It seems their focus on value is working across the board.
And on top of all that, they're getting more efficient. Their adjusted operating income is up 7.4%.
That tells me they're serious about streamlining their operations. They're investing in technology, taking advantage of their size, and ultimately squeezing out more profit. That's what investors want to hear.
One thing that really stood out in their earnings call was their focus on AI. They're using it in a lot of areas, from managing product data to improving customer search results.
That's smart. They're using tech not just to keep up, but to really get an edge. It helps them sell more efficiently and makes their whole operation more profitable.
They're also pushing to automate their supply chain. They're building a more connected and intelligent system, automating things from regional distribution to handling perishables to managing their huge fulfillment centers.
Right, and automating all those processes means lower costs, fewer errors, and faster deliveries. In a world where costs are rising and supply chains are facing all sorts of disruptions, that's a huge advantage.
So we've seen a lot of positive things so far. But what about the risks? Their earnings release mentioned something about economic uncertainty. I mean, everyone's feeling that right now.
Yeah, of course. No business is immune to that. But what matters is how Walmart is preparing for those risks.
True.
And, their focus on value becomes even more attractive when people are watching their wallets.
Makes sense. And then there's just the overall competitive landscape. There's Amazon, of course, but you also have Costco, Target, and countless other smaller retailers all fighting for that market share.
It's a tough market to be in, for sure. But I think Walmart's scale, their focus on what they do best, and these technology-driven innovations give them a real advantage.
Absolutely.
They're well-positioned to hold their own. And I think if they play their cards right, they could even come out even stronger.
All right, so we've seen the strengths, we've talked about the risks, but what does all this mean for someone who's thinking about investing in Walmart? Let's shift gears a bit and dive into that investment assessment. We've got a company with a huge global presence, solid financials showing consistent growth, and they're clearly making moves to stay ahead. But are there any red flags we should be aware of?
Well, we've talked about the economic uncertainty. If consumer spending really drops, it's going to affect every retailer.
Yeah.
And, managing a company of this size, making sure all the pieces work together, that's always a challenge.
Definitely. They also highlighted a few other risk factors in their reports. We've talked about the competitive pressures. And then there's the challenge of keeping up with how quickly the retail landscape is changing. Customer preferences can change overnight, and it's crucial for them to stay on top of those trends.
Absolutely. And I think that's where their investments in technology and data analytics come in. They can use those tools to understand customer behavior, create more personalized experiences, and even predict what's coming next.
So taking all of this into account, do you think Walmart is a good investment?
That's a question each investor has to answer for themselves. It depends on their goals and how much risk they're willing to take. But I can say this. Walmart has a solid track record, a clear vision for the future, and the resources to make that vision a reality. They're adapting to the changing retail world, investing heavily in technology, and delivering value to a really wide range of customers. All of those things point towards continued growth. And that means good potential for returns.
But it's important to remember that the stock market never comes with guarantees.
Definitely.
The best thing we can do is learn as much as possible, weigh the risks and potential rewards, and make smart decisions.
That's exactly right. And that's what we're here to help with. We want to give you the information and perspective you need to make those decisions.
All right, everyone. That wraps up part 1 of our look at Walmart.
In part 2, we'll get even deeper into their financials. We'll focus on profitability, their history of paying dividends, and how analysts are valuing this retail giant.
All right, so we're back. In part 1, we looked at some of the big picture stuff for Walmart. But now we're going to get into those nitty-gritty numbers that investors love so much.
The stuff that really matters, right?
Exactly. Let's start with profitability.
Okay, yeah. Walmart has always been known for their low prices, but they also managed to maintain a really solid gross profit rate. It shows they're efficient, They get those products on the shelves and into shopping carts without breaking the bank. And that's crucial for their whole low price strategy.
And that efficiency becomes even more important now with inflation and all that. I noticed in their earnings release that they put a lot of emphasis on membership income.
Oh, you mean Walmart Plus thing, their answer to Amazon Prime?
Yeah, exactly.
Well, in Q2, they saw a 23% jump in their global membership income. That's pretty significant. It tells me they're attracting members and keeping them. That kind of loyalty, it creates a really steady revenue stream.
Speaking of recurring revenue, let's talk about those dividends. Walmart's been paying them out for a long time, and they've consistently increased those payments over the years.
Yeah, that's a big draw for income-focused investors. Those dividends can really help when the market gets a little rocky. It's a nice bonus for holding on to their stock.
The dividend yield right now is hovering around 1.4%. Not huge, but it's decent, especially for a company like Walmart. It shows they're committed to rewarding their shareholders.
All right, so we've talked about profitability, dividends. To really understand Walmart's value, we have to look at how analysts are valuing the company. Metrics like the price-to-earnings ratio, the PE ratio, and the price-to-book ratio, the PB ratio, those can give us some clues.
For anyone who's not familiar with those ratios, the PE ratio basically tells us how much investors are willing to pay for each dollar of earnings the company makes. A higher PE usually means they're pretty optimistic about future growth.
Right. And the PB ratio, that compares the stock price to the company's book value, essentially its net worth. So that gives you an idea of whether the stock is overpriced or underpriced compared to its assets.
Got it. So what do those metrics tell us about Walmart?
Well, right now, they suggest that Walmart's stock is trading at a slightly higher price compared to some other retail companies.
Does that mean it's too expensive to buy right now?
Not necessarily. Valuation is tricky. It really depends on your investment goals and how much risk you're comfortable with. Some investors are perfectly fine paying a premium for a company that has a proven track record, solid financials, and a clear path to future growth. And Walmart seems to check all those boxes.
It's all about finding that balance, weighing the potential rewards against those risks we talked about earlier.
Exactly. And we have to remember that past performance is no guarantee of future results. Every investment comes with risks, and Walmart's no different.
We talked about economic uncertainty and competition earlier, but are there any other challenges investors should be aware of?
Well, consumer preferences are always changing, and that's something Walmart has to stay on top of. Regulatory changes could impact their business too. And then you have those unpredictable things like natural disasters or global disruptions.
Right. There are always things that can throw a wrench in the works. So it sounds like there's a lot to consider with Walmart. At the end of the day, the decision of whether or not to invest really comes down to your own assessment of their strengths, their risks, and how you like to invest.
Exactly. There's no right or wrong answer. It's all about weighing the information and forming your own opinion.
Okay, so we've dug into Walmart's financials, their strategies, their competition, even touched on those dividends. What are the key takeaways here? What should our listeners be focusing on?
I think the biggest takeaway is that Walmart isn't just your typical brick-and-mortar store anymore. They're really embracing technology, growing their online presence, and adapting to the changing retail landscape.
Right. And they're doing all of that while sticking to their core focus on value and convenience.
Exactly. And their scale, those efficient operations, and the investments they're making, all of that puts them in a really good position to deal with the challenges that are coming and to capitalize on new opportunities.
Even with the competition and some economic uncertainty, they're definitely making moves to stay ahead of the curve.
For sure.
And for investors, that's crucial. Walmart offers a mix of stability, growth potential, and dividend income. And that makes them a pretty compelling company to consider, even if their stock is a bit pricey right now.
Yeah, it's definitely something to think about. You know, before we move on, I wanted to leave everyone with something to ponder. Remember how we talked about Walmart exploring AI for those personalized shopping experiences?
Yeah, it was interesting.
Well, just imagine a future where your Walmart app not only recommends products, but actually predicts what you need, maybe suggests recipes based on what's already in your pantry, and even helps you plan your whole shopping trip.
It sounds like something out of a sci-fi movie, but it might not be that far off.
Right. And it raises some pretty interesting questions.
Like what?
Well, think about it. How would that kind of technology change retail as we know it? Would it make shopping more convenient and enjoyable? Or would it create some concerns about privacy and how our data is being used?
That's a good point.
Yeah, I think it's something worth considering as we watch Walmart's role in retail continue to evolve.
Welcome back. So we've spent the last two parts really getting into the weeds with Walmart.
Yeah, we've covered a lot of ground. Their financials, their strategies, the competitive landscape.
But before we wrap things up, I think it's important to look at things from a few different angles, play devil's advocate a bit.
Definitely. There's always more than one side to the story.
Okay, so let's say you're a bit skeptical about Walmart. Maybe you think their best days are behind them.
I can see that. Their growth has slowed down in recent years.
Right. And they're up against some pretty fierce competition, especially from those online retailers like Amazon.
No doubt about it. The online marketplace is tough. And some critics even say that Walmart's size is actually a disadvantage.
Oh, interesting. What do they mean by that?
Well, the argument is that a company that big can't move as quickly as those smaller, more agile competitors.
I see. But doesn't their size also give them some advantages?
Oh, absolutely. Their scale gives them huge bargaining power with suppliers. They can get better prices, more favorable terms, all of that.
And that massive network of stores and distribution centers, that's got to be a huge asset in today's retail world where everyone wants things delivered yesterday.
It is. They can offer things like in-store pickup and same-day delivery, which is what a lot of consumers are looking for.
Plus, they're not ignoring the online world. We've talked about their investments in e-commerce and technology. They're definitely making an effort to stay competitive online.
And we can't forget about their focus on value and convenience. That's something that appeals to a lot of people, regardless of what's happening in the economy.
So it sounds like there are some valid concerns about Walmart's future, but there's also a strong argument for their continued growth and success.
Exactly. It's all about weighing those different perspectives and forming your own opinion based on all the information you have.
Before we go, I want to point everyone to some resources where they can do some more research on Walmart if they want to dive even deeper.
Great idea. There's a lot of good information out there.
First, I definitely recommend checking out Walmart's investor relations website.
Yeah, that's a good starting point. They've got their financial reports, earnings call transcripts, all that stuff.
And of course, you can keep up with Walmart and the retail industry in general through those financial news sites like Bloomberg, CNBC, Wall Street Journal.
They'll have all the latest news and analysis.
And if you're interested in what those professional analysts are saying, you can always check out research reports from firms like Morgan Stanley, Goldman Sachs, JP Morgan.
Yeah, they go into a lot of depth on things like performance, strategy, and future outlook.
And for anyone who really wants to get into the nitty-gritty, there are independent research platforms like GuruFocus and Morningstar.
They have all kinds of financial data, valuation tools, and analysis that can really help you make informed decisions.
So whether you're a seasoned investor or just starting out, there's no shortage of resources available.
The more you know, the better.
Right. The more you understand about a company, the better prepared you'll be to make those investment decisions.
That's what we've tried to do here today. Give you the insights and perspectives you need to evaluate Walmart as an investment.
We've looked at their financial performance, their strategies, the competitive landscape, even considered some alternative viewpoints.
Hopefully it's been helpful.
Like we always say, the decision of whether or not to invest is ultimately up to you. But with the information we've shared, you can at least approach that decision with a bit more confidence.
And a bit more knowledge.
Exactly. All right, everyone, thanks for joining us.
It's been a pleasure.